What's up guys, Chartsmith here, back again with another video. It's another live trade on the Nasdaq. It could have been a good trade. And as you know, could have been isn't the best word to say here. I made a simple dumb mistake of putting my stop loss on a liquidity point instead of a good swing high that can be protected when price wants to move the way I predicted to go. I was behind my desk for 10 minutes. I placed this trade and that's always a bit tricky when you're just behind your desk. You have to watch out what you're doing. Maybe you've not seen some things, etc, but I was confident enough to place the trade. But as you can see, I make a small mistake of putting my stop loss in the wrong place. And I will take you into the chart on what was good about the trade and why I put my stop loss there. And how I could have done it better so I could have made some money. Alright, I will see you on the charts. Let's start with analyzing our higher time frame. At first, if we're drawing a 4-hour structure, we broke some local structure towards the upside and made this higher low. From this higher low, we can expect a higher high. But when we try to make that higher high, as you can see, we rejected high and we made an SMT. This can signal for us, okay, price isn't ready to take this high. We need more liquidity from the downside until we can take this high. Because this low is nothing until it breaks this high and there's still enough room for the market to make a higher low in this whole box here. So with that in mind, we know we can look for a bearish price action if the local time frame also points towards the downside, and in this case it is pointing towards the downside. And that is because Asia opened. Asia was pretty bullish. When Asia closed, made a nice swing high. We came down, just grinded down. London opened and London couldn't even take out this liquidity point and also couldn't take out Asia high. So it couldn't take out liquidity on the highs, made the SMT, so locally we can also expect for price to look for liquidity on the downside. And in combination with your higher time frame, there's still enough room to trade towards the downside. For me, the signal we can be bearish for at least the whole London session was this. When we made this low, we tried to make a new higher high. If we can't, and we break down below this low, it means for price it needs liquidity from the downside. So that was my higher time frame confirmation. We can target the lows instead of being bullish. Then locally, after London opened, we made this new lower low, a lower high, and again a lower low. Then we came back up, again protecting the high, and when we couldn't break the high again, we made the SMT. So I'm right on the market here because there can be an opportunity for us to short to at least this low and maybe even this Asia low over here. So let's zoom in on the 1 minute. If you look at our lower time frame, we see the small little uptrend here. They tried to break this high. We obviously didn't. Came back down, tried once again. Again made a SMT locally. For me it's over right now. I have every confidence to take this trade. And if we're gonna start hunting this pullback over here, I'm ready to enter a short because this is our last pullback that tried to break our highs, which it failed. So for me, that is the final confirmation I need for my entry. As you can see, we take that low. Now I'm looking for an entry. We have this gap, but we already lost this. I almost played this one, but because we didn't yet take this low, I wasn't in this trade. So I was patient. When we took this low, I looked at what we had left. Oh, and would you look at that. At the 2 minute, we had this small gap left. We held the whole time. Then, when we took this low, we also closed below this 2 minute fair value gap. So that is where I wanted to place my order. And this is also where the mistake has been made. Because if you look at the 1 minute, I placed my order here. And I saw this small little pullback here. It isn't even a valid pullback, it's ugly. You at least have to put your stop loss above here, at least. And the best place would be here. And as you can see, with the risk to reward, it's fine either way, because I just needed one risk to reward from getting my funded. I needed $250 for my funded, so there was no reason for me to be so so reckless with my stop loss. It was fishing for risk reward. I have to be honest, I was just behind my desk. I wasn't sharp enough. They're gonna make mistakes like this and only look at, oh, what is my best risk to reward? Of course, this is a beautiful risk to reward. At your local low, 3RR. For my one risk to reward trade, it was already over here. I made the mistake of putting my stop loss at the point of liquidity. Also over here, this was free to take. You can always manipulate before going down, and this should have been my stop loss placement at least. And then I would still be funded over here at this small liquidity pool. For the rest, the whole picture was really clean. The 5-minute structure you broke towards the downside, leaving open your highs you want to leave open in your structure. The SMTs, it was almost picture perfect if I put my stop loss at the right place. Well, let's see. If I put my stop loss at the best place, what this trade could have done. As I said, I only needed one risk to reward. And yeah, the rest of the day, price dumped and dumped and dumped. It was a crazy dump, but I was stopped out here and my trade was over. So small little mistake. I became retail liquidity like a lot of people because there were also a lot of stop losses above here. I assure you that because I had a lot of slippage. I had $50 of slippage, so you know there's a lot of stop losses being hit there. But my analysis was good. The entry trigger was good. I waited until I had the perfect trigger with taking this low, but I just messed up my stop loss placement. It was a good lesson. Now I'm two risk to reward away from passing my funded. We're not yet there, but small loss in the account. We're still up on the account by a lot, so nothing to worry about. Mistakes like these keep you sharp between the ears, and let's see if we can get funded in the next one. Please like and subscribe this video, and I will see you in the next one.